Congratulations to those of you who are still willing to show up tonight despite everything that's going on. As Dustin was saying, this is typically when, casual investors lose interest, but if you actually understand what's going on, you should, like Dustin said off camera, this is when you should be getting even more interested.
Yeah, I told my wife before I came down to my office here, I said, we got to figure out how to take a second mortgage out on the house because Bitcoin's at $15,000. And she's, her face just went white.
Oh man. Well, as long as you can cover, the second mortgage payment and the interest,
yeah,
as long as it makes financial sense.
Boji, how you doing? Helen, how you doing?
Hello.
Doing good. Yeah. I bought Bitcoin at 2,700. Didn't sell when it was at 60,000. Now is what? 17,000 right now.
Oh,
that's all right.
Lower.
It's almost 15 now. It might be lower than 15 now.
Yeah, it's under. It's at 15.8. You said you bought it 2,700 or 27,000.
2,700 in year 2017.
Nice.
So
well, you're along for the ride. So you're probably.
But I'm curious to know, like, why did Bitcoin crash that much suddenly? I know there's a lot of speculation, but
yeah, we'll be clarifying and clearing some of that smoke up tonight.
Well, the thing is, and the thing about crypto is that it's so new that crypto didn't exist during a real recession. So crypto was created in 2008, I think it was, and it was in response to what had happened to cause that recession.
Yeah.
So the crypto market has not been around long enough for us to actually see what will happen during a real recession.
And higher interest rates than the last 15 years,
yeah.
Which it's funny because I made a video. I don't know if you saw it a couple of days ago. I was like, it's interesting that Bitcoin is still up so high considering, the rates have been going up. They've raised rates 3 times. We're in a macro recession and then FTX collapses.
Yeah. Well, and I was expecting something like this to happen. I had posted, actually, I think it was yesterday, like during the beginning of the day, something to the extent like, it looks like it ain't over yet. We haven't bottomed out. We're probably going to bottom out by sometime this December if we're going to follow the Bitcoin chart from back in 2017, 2018.
Yep.
And, I had a couple people that chimed in and said, oh no, we hit the bottom. And then literally an hour later, FTX collapsed and everything just bottomed out. And I'm like, I told you so.
Well, I will say I thought we would bottom around like 20 to 25. So, but you've always got to be ready to pivot and you got to be willing to be wrong. But
yeah, I think again, this is like a different situation than any time before. We've got a real recession going on while we have the market cycle of crypto being in a recession.
While crypto is experiencing its own 2008.
Yep.
Awesome. So how many people we got?
We are 6 minutes in. This is a mastermind for real estate professionals. Liam, I don't know how many real estate professionals but they usually show up 15 minutes late. So we're going to get started, and then whoever shows up. I hope more people will show up. But again, this is typically how it goes when crypto starts crashing. Everybody seems to lose interest when they should be gaining interest.
Yep.
So Liam, we haven't introduced Liam. This is Liam Chase. Liam is a Facebook friend of mine. We ran into each other on Facebook probably because we were both on the same crypto group talking about crypto, and we liked what each other was saying. So I think that's what happened.
Let me look at our mutual friends. Hold on, because we have 2K mutual. Wait, no, we have 5 mutual friends. Okay, so it looks like you're connected with somebody in Apex. Yeah, because I see there's a couple of Apex people.
Yeah, maybe that's it.
Yeah, cool.
So to get started, I'm going to be asking Liam some questions about himself and about his business. And so you guys can get to know him a little bit better. and then I'm going to let him kind of take over and teach us a little bit about what he does, what he teaches, and give us some pointers on how we can earn turnkey passive income with cryptocurrency.
Yes.
So Liam, how old are you?
25.
Okay, 25 years old. Pretty young. I think I got into real estate when I was 28. So you're a little bit younger than I was when I found my calling.
Yep.
Where are you located?
I'm out of Orlando, Florida.
Okay, Orlando, Florida. Where are you? You're originally from Orlando, Florida, yes?
Correct. But I did spend 4 years in LA. I call it my four-year round trip.
Okay, awesome. And what do you do right now? Like, what is your full-time, gig or job or career? Like, what's your focus?
So right now, I have a couple different businesses. I help people with crypto. I have a crypto consulting firm, basically helping people get onboarded, generate turnkey passive income, navigate crypto safely, things like that. And then I also have a marketing agency for local mattress and furniture stores as well. So that's what I do currently. Yeah.
And I guess this is kind of two questions in one.
Yeah.
If you can tell us your story, and in telling us your story, tell us where you came from. Like, what was the last industry you were in, and what caused you to make this shift?
Yeah. What sparked me to get so curious and interested in crypto?
Yeah.
So I'm 25. I was about 20 years old in the last bull market, right? 2017. I was somebody who didn't really believe in investing in crypto because I was always of the mantra like, oh, you got to invest in yourself, which I definitely do still believe. And so I made a little bit of money in 2017, and then I kind of followed the market from 2018, 2019. Wasn't super financially invested, but was definitely keeping an eye on the market. It wasn't until about 2018 is when I got into the metals industry, right? So I started learning about precious metals like gold and silver. And essentially what I was doing was helping retirees convert a portion of their stocks and bonds into gold. And through that process, I did that for about 4 years. That's what I was out in LA for. But through that process, I really self-studied macroeconomics, how the Fed actually works, how money actually works, how a monetary system actually works, how the stock market actually works, and just really a lot of the inner workings of Wall Street money and the financial system that I feel like most people don't have the understanding of. And one thing that I always think is very important to truly understanding crypto is the context, right? Because when I learned about crypto in 2017, I was a young 20-year-old. I didn't really know much about money, stocks, really anything. But it was through the experience and learning about how to actually pitch metals and how to sell metals, and and obviously when you're selling something, you have to learn the opposite. Like you have to learn the weak points of what you're trying to get people to get out of in order to get them into metals, right? So annuities, stocks, bonds, like I knew the weak points on all those things. And so through learning all that, when I started to see the value of metals, right? Now, crypto was always a part of that conversation because we always hear the saying, Bitcoin is like digital gold. And so what I realized through that experience is to me, I don't think Bitcoin is called digital gold because it's a flat, safe haven asset. Obviously, it's super volatile. But through what I learned about metals and gold, if you look throughout history, gold was really money for two reasons. Number one is it was not printed by the government. It was limited in supply, right? It couldn't just be picked up off the ground, couldn't be printed by the government. It wasn't controlled by the government, wasn't printed by the government. And then number two is that you could fully own it, right? So what that means is whenever you buy a stock, you don't actually own the stock. It's actually the brokerage that owns it, right? That's like what we saw happen with FTX right now in terms of crypto. That's what we saw happen with Lehman Brothers. And so pretty much every asset class, stocks, bonds, even real estate, like you can't fully own them. And when I say real estate, I mean is if you don't pay your taxes, like they're going to come after you, right? Whereas with gold, you can put gold in a safe in your own home and you don't have to worry about paying any taxes, and you don't have to worry about a third party having control of it. So it's called third party exposure, and you don't have any third party risk, right? Like you did with stocks and bonds and all of these Wall Street type assets. So that's what I learned. And so when you look at Bitcoin, it actually matches the two same things. Number one is Bitcoin is not printed by the government. It's limited. It's actually more limited in supply than gold because we've been mining gold since the dawn of time, and we're still mining gold to this day, 2,000 years later. Whereas with Bitcoin, it started in 2009, and we know exactly when the last Bitcoin is going to be mined, which is in 2140. So that's a lot less time than 2022 years that we've known of gold's existence. And then secondly, with Bitcoin, you can own it fully. You don't have to rely on a third party. You can put it into your crypto hard wallet, which is like your digital safe, right? So those are the two things that I saw that really were equivalent between metals and Bitcoin specifically. But as I learned more about the financial ecosystem, Bitcoin, the reason it's called Bitcoin is because Bitcoin, you can't really do much with, right? Like with gold, you put it into a vault and it sits there and that's about it. With gold or with Bitcoin, pretty much the same thing. You put it into your crypto hard wallet, it sits there and you ride the wave like Boji has since 2017, right? Whereas what I found really interesting was Ethereum was more building like a new version of a computer. And so the way that I think of this is, if you have an iPhone, you obviously have, every couple of months you get an iOS update. We just had a big iOS 16 update. But on top of this iOS, this operating system, exists all the applications that we use, right? Facebook, Instagram, Twitter, there's a plethora of apps that we can use. So Ethereum essentially is an iOS. It's an operating system in which these different applications are being built on top of that have different use cases, right? So one of the things that like with banking, whenever you're depositing money into the bank, and I mean everywhere, like your stocks are being lent out. That's why the whole Robinhood fiasco happened in early 21, because they were short selling the GameStop and AMC and all these meme stocks, right? They were lending them out. They were lending out more tokens than, they were lending out more stocks than are actually available to be lent out, and they were over leveraged and things like that. They got caught their pants down. And it's funny because people blame Robinhood for the whole freezing of the stocks being traded, but it wasn't actually Robinhood's fault. What a lot of people don't realize is that whenever you're doing a stock transaction, there's not just you, the buyer. It's not just you, the buyer, and then the seller, and then the third party. There's actually about two other institutions, two other third parties that are involved in that transaction. So there's the clearinghouse, and there's also what's called high frequency traders, which create liquidity for the market. And then you have the exchanges like the NASDAQ, the New York Stock Exchange, all these different places. So there's a lot of different parties, but the biggest thing that stopped the Robinhood and caused them to freeze the trading of the assets and the stocks at the time is that essentially the transactions couldn't settle fast enough, and they didn't have enough capital on record with the clearinghouse to actually settle all these trades properly, which doesn't make a whole lot of sense, because when you buy a stock, like, you're buying it cash. But if you know about stock market, you know that anytime you buy a stock or an option, you can't withdraw that money for a certain amount of time. It's called T+2, which means whenever you buy a stock, it takes at least 2 days after the transaction for that transaction to be recorded on the record book, right? And so this is where crypto starts to convene, because crypto itself is a ledger. And so the entire financial system operates on a ledger, right? It's just it's an analog, non-digital ledger. In some cases it is, but in the case of the stock market, they still have T+2, which is transaction plus 2 day settlement before it's actually recorded on the record book of the clearinghouse. And the clearinghouse is the third party that checks and verifies everybody's transactions, make sure that everything's good to go. Do you know about this stuff? Do a lot of you guys know about this, or is this new?
No, well, the details of it are new to me. Yeah.
Okay, good. So where blockchain comes into this is the biggest use case for blockchain is instant settlement. So because it's decentralized and there's not a third party, like a third centralized party that's actually checking these transactions, like the way blockchain works is it's a distributed network of people verifying transactions, and it allows it to be settled instantly. So instead of T+2, or like you guys are in real estate, so you know how long it takes for a wire to settle, or how long it takes for funds to settle, or how long it takes for a house to close. Like there's all these steps and things that you guys have to take in between closing houses that is really unnecessary friction because of the technology that exists. But it's going to take time for us to get to the point where we're doing like real estate transactions on the blockchain. But I can really see a world where a lot of the things that we're doing in the traditional financial system, like stocks, there's no reason that we need to wait 2 days for those things to be settled before we can actually sell our stock, get our money back. Right. So those are, I know this is probably a little in depth, but you said you wanted to be informal and educational. So I'm going deep, man.
Well, so theoretically, and I'm going to say, so you're saying like cryptocurrency can settle these things instantaneously. And I'm going to step in and say, theoretically speaking,
yes,
cryptocurrency can settle these things instantaneously, because one of the issues with Bitcoin is we call it digital gold because you really can't just go out and buy stuff with it, because at times it takes maybe an hour, sometimes even, for the transaction to be settled, depending on how many people are using the network.
Yes.
And then you also have, sometimes exceptional fees involved. And that was one of the problems with Ethereum as well, is that like the fees started to get to be too expensive for it to make sense.
On low cost transactions, yes. But when you say, even with Bitcoin taking a couple of minutes or even an hour, that's still faster than 2 business days.
Yeah, yes, agreed.
And that's still faster than, like I used to do. So when I was doing metals, I would initiate account rollovers. It would take 5 to 7. I had to submit a paper transfer form. And in most cases, it could take 2 to 3 business days, depending on the account type that it was. If it was an IRA, it would go like 1 to 2 business days. If it was an annuity, it would take 7 business days, right? So
yeah,
all these business days compared to crypto, even if it takes an hour or 2, it's still
right. It's better than, we put wires in. It's like, you missed the deadline, so it's not going to go in until tomorrow at like 2 p.m. or something. It's like, are you serious? So you were doing metals in 2018. Was that 2018 you said?
Yeah, I started towards the end of 2018. I did that through 2022, through earlier this year. Yep.
Okay. Where were you selling? I remember you saying something about selling mattresses, and you sold like a ridiculous amount of mattresses one year.
So that was the industry I was in before metals.
Okay. Well, what was your best mattress sales month or year?
So I sold over the phone direct to consumer, and my best month I did about $450,000 in mattress sales over the phone.
That's insane. So there's real estate agents that don't sell $450,000 worth of houses in a year.
The system was set up like, I'm not going to take full, like, it's not like I was cold calling people, like these were leads, but my sales process was a lot smoother. I got accused of stealing leads from people. The manager checked everything, found there was no harm. So, well,
that's what happens. You start doing a lot of business and then everybody's out to get you.
Yeah, exactly. And then I think my best year, I did like 2 million selling mattresses. I think my average ticket was like $2,500, $3,000.
Wow.
Yeah.
Okay. So yeah, I wanted to make sure everybody knew, because a lot of us we're sales agents. So I wanted them to see that, this guy that we're talking to, he came out of sales as well, and he wasn't selling houses, but he was making some pretty damn good money at it, probably.
Yep. And then with metals, I did about 5 million in revenue over the phone. So just moving over retirement accounts, about $180,000, I think was my average rollover. Yeah.
Wow. Yeah. So you're getting somebody to hand you $180,000 and trust you with it.
Yeah. All over the phone. I didn't even do Zoom, nothing.
Yeah. Nice. So we talked about a little bit about this. I'm going to ask you this question, and maybe it'll you'll see it, bring us a different angle. But so what is blockchain, and why the hell do we need it?
Yeah. So to make this a little simpler for you guys, so I know I went pretty in depth talking about the Wall Street and stuff, but that's the underlying, like when you start to understand that stuff, and that's why I said context is so important. You guys are in like financial services to a degree. You're obviously dealing with real estate, so you guys know more than the average Joe. you may not know to the same depth that I do, but that's the stuff I had to learn about selling metals. But what is a blockchain? Well, blockchain is really just a digital book, right? So here's a book. It has a front, it has a back. So when we say block, what does that actually mean? Well, you can think of a block like a page in a book, right? So here's a page. Here's page 1, or yeah, we'll just say that's page 1. So here's page 1. It has data, it has information, has words, letters, numbers, photos. It can do whatever you want. Like books have anything. So block, and in this block is all the data. And then the chain is, okay, so when this page fills up, what do we have to do?
New page.
New page. And how are books usually ordered? Sequentially by number, right? So you fill out page 1, you put all the whatever you want to put in there, it fills up, you go to page 2, you go to page 3, so on and so forth. And so that's essentially what blockchain is. So you could think of block as the page, right? So can I share my screen? Because I think if I can.
Yeah, I got to give you host, I think.
To really make this connection for you.
Yep, go ahead.
Yeah, because I'll show you the example in the actual blockchain. So you saw the book, you know what a book is. That's not the hard part. So how do we connect that to a blockchain? Well, block, okay. So here's block, right? Block 1593571. This is just the page number. This is page number 1. How many millions is that? 15,935,717. That's just simply the page number, right? Now, what's on this actual page number? It looks like there's 46 transactions. So all this is the equivalent of what's on this page right here, right? This is just the data that's on the page, right? So these are just various transactions, transfer, executions, approvals, swaps, whatever you can do on crypto. But the blockchain is, so that's the block. And then the chain is, okay, so we're on 15,935,717. We fill that block, we fill that page up. What do we do next? We go to 15,935,718 and so on and so forth. So the difference between a regular book is this is obviously bound by the front and back cover because you can't make a 15 million page book in real life. It's like physically impossible. Whereas with blockchain, you can have an infinite book of information. So that's really how I explain it and describe it. And why do we need it? That was the second question. Well, we're still figuring it out, but I think some of those examples that I gave you earlier about how you're able to settle transactions faster is really the big one. Because when you think about the technical revolution that we've had over the last 20 years, right? We've seen that Google has basically destroyed, what did they do before Google? I'm only 25. So what did you have, like the encyclopedia or something before the Google?
Well,
like how did you source information before Google? I don't even know.
I remember when I was a kid, people would knock on your door and try to sell you encyclopedias.
Yeah.
It was like, you would look up like the Middle Ages and it would have like, this is what the Middle Ages is. So yeah, that was it. And dictionaries, they tried to sell you dictionaries, Bibles, and encyclopedias.
Yeah. So Google replaced encyclopedias.
Not to cut you guys off, but I actually feel kind of attacked that microfiche was not mentioned in this.
Oh, microfiche. Yeah. I remember I worked in the library and I was on the microfiche. That was what I did.
Yeah. I've never heard of that. Sorry. But yeah, so we've obviously had Google replace encyclopedia, microfiche, dictionaries, whatever. We source information from Google. Uber obviously replaced taxis. Social media replaced your local community gatherings. We obviously transitioned from a analog world to a digital world. But what are some of the key sectors that never really made that transition? Education, healthcare, finances. The big one is finances. And even though we have mobile apps, like we can download Robinhood and we have these fintech apps, they're only fintech on the front. But on the back end, they still have to abide by the 50-year-old rules of the financial system, which is you have to wait 2 days before that transaction is official, before you can actually sell and do things. And so everything that you're able to do in between that settlement time is actually all credit, right? So that's what a lot of people don't realize. It's all credit. It's all a big credit-based system, which we all know that's true. But that's like what we saw happen in 2008 with Lehman Brothers. And by the way, a lot of people don't know this, but a big reason another big thing about crypto and blockchain is the transparency that it brings, because in 2008, it was actually this thing called Repo 105 that Lehman Brothers was using to fabricate their balance sheet. So obviously you would have they would have scheduled regulators coming to check their balance sheet, making sure they're sufficient, making sure they're solvent. But essentially what Lehman Brothers would do is they would swap a portion of their non-cash assets to cash, so that when the regulators came by, it would look like they're solvent and they have sufficient cash to cover, God forbid, anything would happen. And then shortly after the regulators would leave, they would just pay back, they would redeem their collateral, because they're basically getting a collateral. They're putting up some asset, getting cash, and then they would repay that and get the balance sheet back. So that was a big reason for the failure of Lehman Brothers, right? Which is, with crypto being transparent, we can essentially track everything on the blockchain. So let me show you what I mean by this. One of my favorite apps, and I actually call this the crypto bank, is Aave. And this is just like a bank, except for it's almost more like a whole life policy. So if you know how a whole life policy works, you deposit cash and you can take a loan against your cash at a specified interest rate. But in this instance, you can there's various crypto assets that you can deposit, right? So you have these things called stable coins, like USDC. This is essentially tied 1-to-1 with the dollar. We did have a collapse of UST earlier this year. That was a little bit different of a story. We won't go down that rabbit hole quite yet. But things like USDC, that's the best example. It's a stable coin. It's basically a digital crypto dollar, a blockchain dollar. And then you also have things like Ethereum, Bitcoin, Avalanche, all these various crypto assets. But what's cool is that this is the most transparent bank ever, right? Because we can see right here. So tell me if you've ever seen this openly in public on any bank. So here we know exactly how much collateral is in this system right now. So they have $2.3 thousand Bitcoin deposited up as collateral. That's worth about $36.5 million. These depositors are earning 0.18%. And then here's the borrow information, total borrowed. There's 278 Bitcoin borrowed for a dollar amount of 4.38 million. They're paying about a 1.88% interest rate on those borrows. We can see the utilization rate is about 11% or 12%. So basically only 12% of the Bitcoin that's in deposit as collateral is being borrowed. And we can see, and by the way, so these rates are actually all based on true supply and demand. There's no Fed here that's dictating the APY of supply or the borrow rate of Bitcoin. It's all literally based on supply and demand, the utilization rate.
And so that's like an algorithm that's built into it, and it just automatically changes based on supply and demand. So it's not really, there's no human sitting at the Fed saying, I'm going to raise the interest rate by 0.75% this month.
Yeah, exactly. And so here's USDC. It's a much more borrowed asset. So let's see, total supply, there's $346 million of people supplying this. They're earning a 0.45% rate. Total borrowed is $115 million. They're paying 1.5%, which, by the way, this is something I've been talking to real estate investors about. Where are you getting debt for 1.5 right now, other than the crypto market?
Yeah, the current commercial rate is at least 6.5%.
Now, granted, you do have to have some sort of collateral, because in crypto right now, there's no such thing as credit, right? Because there's no way for there's no credit, because there's no way for us to identify who is who. Like if you default on a credit card or a house loan, they recapture your assets because they know it's you. That's why you have to fill out credit applications and things, all those things. Whereas with crypto right now, that doesn't exist. So you have to be over collateralized, right? So in order, just like real estate, like the real estate loans over collateralized, you put 20% down, but you're buying an asset that's worth, the amount minus the down payment, right? So it's an over collateralized loan. That way, if you ever default and foreclose, the bank can come in, seize it, and then resell it and basically regain what they really didn't lose. But we can talk about that another time.
So to summarize, when you put a human in charge of the books, a human is going to be a human. And if they can pull the strings a little bit and fudge the numbers to make it work to their advantage, they might do that. And then you end up with a global freaking collapse.
Yep.
Because somebody wanted to make a little bit more money than they were making.
Yep.
And what blockchain does is removes the human from the ledger and automatically records the ledgers. So the blockchain is the processing of the ledger without human interruption or interaction.
Well, the blockchain is the truth. It's the source of truth, right?
Right.
So, but yeah, like loopholes in accounting, this is the problem. And we saw Enron, we've seen Bernie Madoff, we've seen Lehman Brothers, Bear Stearns, all these things in the traditional world. We'll talk about the crypto world because it's a big misconception, obviously, with everything that's happened over the last year. A lot of people are confusing that with crypto, but we'll talk about that. But yeah, we see all these, clearly we see evidence of nefarious activity or things that are just not really like they're loopholes and they shouldn't exist. And so essentially blockchain gets rid of certain loopholes. And yeah, it's really the source of truth, right?
Yeah. Now, and one of the things that you were talking about with Aave is it is basically an online, it's a digital bank for digital assets. And their books are open to the public. So you can see how liquid they are. You can see the health of that bank per se.
Yep, exactly.
Now, one of the big differences, and Liam and I were talking about this a little bit. So one of the big reasons why cryptocurrency is collapsing right now in price, the market's collapsing, is because.
Oh, I think you muted everybody. Or you muted yourself.
Yeah, there we go. So one of the reasons why cryptocurrency prices are dropping right now is because an exchange called FTX collapsed. And what happens is that the general public doesn't really know that much about cryptocurrency. So they will say, well, this cryptocurrency scam FTX, went to crap. So that means the rest of these cryptocurrencies can't be trusted.
Yep.
And why did FTX collapse, Liam?
Oh, that's a long story too.
Well, in summary,
I'll give you the summary.
Yeah.
They printed their own token. There's this thing called FTT. It's a useless exchange token that I've never talked about, but they basically inflated their balance sheet. So FTX is a crypto exchange, but they're not actually a crypto. So they're basically a traditional company dressed up with a crypto moniker, right? But their balance sheet and their books, like Aave, is transparent. They were not a publicly listed or traded company like Coinbase. Like I use Coinbase, and everybody that I work with, I always have them sign up to Coinbase because they're publicly traded. Their books are a little more transparent and public than a private company like FTX, but it's still not as transparent as DeFi or crypto itself, because this, like for Aave, is always right here, whereas Coinbase only shows their books every 90 days, right? They do those quarterly, the S13 filings, they do the check-ins every 90 days. Whereas if you're not publicly traded, you don't have to do any of that, right? So with FTX, they were basically inflating their balance sheet by printing their own token, and just driving demand through that because they were giving incentives for traders on their platform. And then basically what happened was, now the thing about it is, because we're Americans, like we don't use FTX or Binance, but Binance is the largest international exchange. FTX is the second largest international exchange. And essentially the owner of FTX has been lobbying against crypto and kind of lobbying and bribing Democrats to try to impose sanctions and regulation against crypto that would not be favorable to what crypto truly is. And so the founder of Binance, CZ, basically said, yo, we don't like that you're regulating against the entire industry. We have $500 million of your token. We're going to dump it. And that's how this all started.
Yeah. And now, not to get too far into the weeds, but there are semi-conspiracy theorists that also feel that it is potentially part of the war between the Chinese dollar and the American dollar, which I'm not even going to get into that. But what we have is that, we had one exchange that dumped another exchange token and turned it into a worthless, asset, if you want to still call it that. and it ended up crashing the market. And a lot of it goes back to the fact that FTX was not transparent in the first place.
Yep.
And unfortunately, a lot of people put their assets there and they shouldn't have.
Yep. Yeah, it's so the reason it's crashing is because they created this FTT token, which has no affiliation to any blockchain. It's literally a security. I don't know why the SEC hasn't gone after these types of tokens, right? There's printed by an exchange. Voyager did the same thing. FTX did the same thing. They're printing their own crypto tokens that have no tie to an actual blockchain. And they're literally issued by a centralized entity. Whereas with crypto and DeFi, even though there's tokens that might be created, they're issued by decentralized smart contracts. Like there's not an actual CEO, there's not an LLC, there's not all these traditional entities involved. So they're just printing this worthless token, and it's worthless. And so that's just being exposed at the end of the day.
So I'm going to get back to the more simple questions. What is the difference between cryptocurrency and blockchain? Are they the same thing?
No, they're not. So blockchain. So let's see. Blockchain this is the blockchain, right? The blockchain is the book that we were talking about earlier. It actually shows you the truth. Like, hey, here's what happened on this day when this page was published. Like we were on, 717 earlier. Now we're on 791 just throughout this conversation. So this is the actual blockchain. That's the technology of actually processing transactions rather. But crypto itself is the incentive for people to actually process these transactions. So here's what I mean by that. The reason Facebook is free, the reason every social media is free is because on the back end, there's a third party, a company that's monetizing your data. They're selling your data to advertisers. That's how Facebook works. That's how every social media platform works. That's why they're able to make it free, because they make money on the back end, right? With crypto, and same thing with banks. They used to pay you some money, but we know how banking works. You deposit your money, they lend it out, they multiply it by 10 times, and then they make money on that money and they don't give you anything anymore, right? So there's always a third party on the back that's making money off of your information, making money off of your money. There's money being made somewhere. Well, with crypto, because there is no big third party, there's no entity that can actually monetize this stuff. The only way for this to work is people have to be paid to publish the pages, right? So the crypto is what you pay these publishers to actually write your transaction in the book of blockchain, right? So they make the money on the front, but there's no way to really monetize it on the back.
And those publishers, just to be clear, it's not a human actually like recording.
No,
it is it's a human with a computer that's got
Correct.
The program in it, and
Yeah,
that computer runs.
Yeah.
And the algorithm or the software of the blockchain does it automatically.
Yeah. Yep.
And anybody who's got a computer running that recorded a block,
Yep.
they get paid a reward, and that reward is in the cryptocurrency of that particular blockchain.
Yeah, because at the end of the day, the economy is about incentives, right? The reason people invest in real estate is because there's tax incentives. The reason people start businesses because there's tax incentives. So the entire economy is built on incentives at the end of the day. Like we just had there was a new incentive for like solar. They increased the tax write-off from like 26% to 30%. They're subsidizing certain sectors with loans, right? So it's all about incentives. That's how the traditional economy works. With crypto, what I always say is it's the same thing. It's a digital borderless economy. There's incentives, there's politics, there's voting, like everything that happens in the real world happens in the crypto world, and like the digital borderless economy, which is what I participate in. But so that's the difference between blockchain and crypto. The crypto is the actual incentive for the book to be published, and you talked about the publishers. So
yeah. So quick question is when people are mining certain coins, correct, what are they doing? Are they essentially just pounding on one blockchain system over and over again so they get paid more incentive to use that system? So basically they created or they mine a new coin. So
in the case of blockchain, what they're doing is So in order for these pages to be published, like nobody can just publish them, right? So what mining is the process of, you have to solve it's called proof of work, right? And essentially what you're doing is the computer, you're not doing it. No humans actually doing it, but the computer is solving a very complex math equation. And once they solve that math equation, they have the permission to submit the next block. So basically that's the stamp of approval for them to say, hey, I published this. And because I published this, I get paid for this work, right?
Yeah, and that it's called cryptocurrency because it's a cryptograph. It's a cryptograph that's being solved. So there's a problem that's being solved by the computer, and whichever computer solves that problem is the computer that gets the reward of the currency.
Well, yeah, they get the permission to publish the next block, and then by publishing they get the block, they get the reward. Yep.
And if there's a limit to it, that means there is a limit of all the problems out there that you can solve for that particular coin, right?
A limit to what exactly?
A limit to how many Bitcoins you can mine. After that, there's no more.
Yeah, so that's a whole so when the last Bitcoin gets mined, the theory is that the transaction fees is what the incentive will be, because there'll be so many people using Bitcoin in 2140 that there's going to be just enough fees that there will be incentive for people to continue to mine it. But you won't be creating any new Bitcoin. You'll just be getting already existing Bitcoin.
Right. And that brings us to like proof of work versus proof of stake. I think we probably are best not to get into that.
That's
not. Because we're running out of time. Let's go into, so give us a little bit of information about how do we earn this turnkey passive income through cryptocurrency?
Well, this is one way. These are not, so when I first came across the Aave platform, I'll just kind of take you through my story. I came across here and I was like, oh, cool. I can earn 0.18% on Bitcoin. I'm like, what's the point of that? That's kind of like, that's not a lot. Like, what's the point of that? But what I didn't realize was Aave isn't meant for you to make money directly on your Bitcoin. It's meant for you to hold your Bitcoin and keep exposure to Bitcoin or whatever asset listed here, right? But we'll just talk about Bitcoin and Ethereum. So like, let's say you want to hold those things, but you want to tap into the equity. It's just like refinancing a house. Like if you have tenants, they pay the rent, they pay the mortgage, they pay off the debt, you build equity over time, then you refinance the house, you do it all over again. That's what real estate investors do, right? So they just and that's essentially how crypto works. So you can refinance your Bitcoin to a degree, you can put it up as collateral, you can borrow, stable coins like dollars against it at 1.49%. And then you really just do a debt arbitrage. Where can you earn more than 1.49% on the debt, right? So whether that's in the crypto world, whether that's in the real world. And now the reason you would want to hold on to your Bitcoin and Ethereum, obviously, is because you believe that it's going to go up a lot over the future, right? So you have to be a believer. But another way is one of my favorite platforms, GMX. This is a service. So I focus on real products that provide real services that generate real revenue. Oops. I think my computer crashed. Can you guys hear me?
We can hear you and see you, but we lost your screen share.
Okay. I was just getting to the good part. This is where dang it, why is this not working? There we go. All right. So on the Ethereum blockchain, like I was saying, there's all these different applications, and I'm going to show you guys one of those applications now. If I can get this to load. And then
let me ask you real quick.
Yeah.
So on Aave, I'm going to run through a hypothetical situation. Let's say I had $250,000 worth of Bitcoin right now. I put it on Aave. Can I then borrow, let's say, $200,000 worth of USDC from Aave because I have my Bitcoin stash there?
You could, but I wouldn't recommend it. Right. Okay. So generally you want to take like a 30 to 40% loan to value ratio. Okay. So, I mean, if you're taking 200,000, you're taking like almost 80%, right?
So if we change the ratios to make sense, so we got
Yeah.
$300,000 in Bitcoin and we're going to
Take
borrow
100,000.
100,000 in USDC.
Yep.
And I could take the USDC,
Hmm.
convert it to actual US dollars,
Correct.
go buy a house with it,
Correct.
and I might be paying like 1.6% interest on that.
Correct.
Do you guys see any value in that?
And so now what's really cool about pairing real estate and crypto is that obviously with crypto, you've got to watch the health, like the liquidation factor, right? Because it's a lot more volatile than real estate. Like you can get margin called on crypto a lot easier than real estate, right? But what's cool is that if you use it like a whole life policy, you can just redirect all the extra profit you're making to repaying that Bitcoin loan. And then guess what? Now you own the $250,000 in Bitcoin and you own the house free, like you own both free and clear. And then you can just retake that loan and repeat over again. So it's almost like that infinite wealth hack, like people do with whole life.
Yeah, with the whole life.
But what I like about crypto is that there's no premium. And then there's also like it's instant access. Like you can take money whenever you want and send it whenever you want and do like whatever you want with it. Whereas with like whole life, you can, but like you can't take loans on weekends. You can't process a loan after 5 o'clock. It's the same rules as the traditional banking system. Whereas, with Aave, that's basically like a whole life on the next level because you can take it whenever you want. And it's lower interest rates than a whole life policy, right? The dividend's not as high, but if you have exposure to something like Bitcoin and Ethereum and you can hold it long term, like that's gonna, if history is any indication, the last 10 years, even the last 5 years, which by the way, Bitcoin, even with everything that's going on right now, is still outperforming gold on a 5-year time chart. So despite it, it's still outperforming gold. So yeah, that's what's really cool about it. And I think a lot of people will start to discover that. But I think, so here's another example right here, GMX. This is essentially a derivatives exchange, right? So the actual product here is a trading platform where people can come in here and do leveraged Bitcoin, Ethereum, different various, trading, right? They can take leverage trades. And every time they do that, they obviously are borrowing funds to a degree. And so they actually pay fees. Like you can see there's fees right here, borrow fee, right? They're paying a percentage on every hour that they're borrowing, right? And so that's generating real revenue, right? Because this is a real service and they're paying real fees. It's not just being printed out of thin air. There's people paying for the service, just like when you use a Robinhood or a PayPal or anything that has a transaction fee, or Stripe, for example. Like Stripe takes a transaction fee whenever you process a transaction. That's just how it works. So right now, this is earning 26%, and it's not paid out in some random token like that's printed out of thin air, like FTT token, or they're not even paying you in their own token, which they do have a token. It's called GMX, but it's actually getting paid out in Ethereum, right? Now, sure, Ethereum is created by the mining or the staking process now, but the point is that GMX themselves doesn't create the Ethereum token. You see the difference there?
It's paid in interest by the borrowers.
Yeah, exactly. It's paid from the borrowers. It's not printed out of thin air by GMX, the platform. Exactly. So that's the type of things that I like to focus on, where there's actually there's a user, there's real revenue. It's not just printed out of thin air by the platform itself. So that's an example. So yeah, you can do lending. You can do a lot of it's lending your money. You can do liquidity pools. I'm not going to go into that, but there's just various ways that you can lend your funds, right? So it could be for loans. It could be for trading. There's just various ways to lend the funds.
Yeah, and the big disclaimer is that if you invest cryptocurrency, you're typically getting paid in interest, but it is the token that you're getting paid in.
Yep.
So when you get into like liquidity pools and some of this other stuff, like if you were to take $100,000 yesterday and invest it, and you might think you're earning like this big 26% interest, and then the market crashes and you lose 20% of value, you can lose more in US dollar value then you gained an interest in the token. So you got to always remember that. And I found that out the hard way when I was messing around with liquidity pools.
Yep.
Because you'll get like these new tokens and they'll pay like 1,000%
Yep.
interest.
Yep.
But the thing is that like
They're
if it's a
not
crap
sustainable.
token, it ends up being worth less than when you invested in the first place, and you lose money even on that crazy interest rate.
So here's another one, Curve Finance. So this is a derivative exchange leverage trading. Curve is an actual DEX. So it's like Coinbase, it's like FTX, except for it's actually transparent, right? So we can see the pools here. We can see the different things. There's, $700 million in total value that's available to be traded against. There's 795 volume. If we go towards the bottom, let's see if they actually recently updated their UI because it used to be really bad. Dashboard. Oh, here we go. So daily volume. So their processing was 100,000 million billion. They've processed $1.4 billion in transactions. Right. And there's nearly $4 billion of liquidity or deposits in this platform to facilitate these $1.4 billion in transactions. And so the stakers of this particular token, Curve, CRV, they actually get a share of revenue. And right now it's actually producing about 6%. So you can see this 3 CRV that is paid in this is the 3 pool right here. So it's actually paid out in DAI, USDC, and USDT. So these are actually stable coins. This isn't even volatile tokens, right? So you're getting paid in cash. It's crypto cash, but you can redeem this. You can send it to Coinbase, sell it to cash, send it to your bank account without having to worry about the volatility of these particular tokens because they are what's called stable coins, right? But right now, because of all the volatility, and by the way, volatility is good for platforms like this because right now, guess what? Everybody's transacting, they're paying off loans, they're moving their money, they're trying to figure out what's going on. So this daily volume, I can pretty much guarantee you this is a spiked volume for this platform because of all the volatility. So a lot, and this is also spiked as well. So on this side of crypto, volatility is actually good because you're going to earn more in fees because there's more activity going on. People are just panicking, they're just selling, they're trading, they're whatever, right? Whereas when things are boring, nobody's really doing anything. So volatility is actually good. You just have to know what strategies to actually deploy. That way, you're getting into the right stuff and things like that.
Yeah. And this thing, so Curve, what we're looking at right now, when we say DeFi, we're talking about decentralized finance. Mm-hmm. And these DeFi exchanges, it's almost like you going to like a currency exchange, right?
Yep.
And if you wanted to make money on a currency exchange, you might put up $100,000 in American dollars that exchange is going to use when they have somebody that wants to exchange, whatever, British pound for dollars. Mm-hmm. They would tap into your reserves there in order to make that exchange happen. And then there's a fee paid by the person who's making the exchange, and you get part of that fee.
Yep.
It's the same thing that's happening here, except there's no humans involved. It's an automated process that's running on blockchain.
Yep. It's all software based. Exactly.
Yeah. All right. So we are running.
You want to open it up to questions for them?
Yeah, I was going to say, we're running out of time. Any questions? We do have a question. Helen had posted, once you purchase Bitcoin, is the next step to put it in a wallet?
Absolutely. 100%. Ledger, Trezor. Dustin?
Yeah, if you're going to hang so I don't typically move it to a wallet because I do a lot of moving it around. If you're just going to hold on to it and your goal is to buy it and hold it and ride the waves like Boji's doing, you put it in a wallet, and Liam's going to tell you're going to want to have a hardware wallet. So it's almost like having it in a safe. You have it on a USB card basically. And then that way you can take it with you if you want. You can physically move it around if you want. And whenever you want to spend it or cash it in, you plug that in, you pull it off of there, and then you move it to an exchange and sell it or trade it.
Mm-hmm. And the reason that's important is because that would help you avoid instances like what just happened with FTX. Like if you left your Bitcoin on FTX, you wouldn't have your Bitcoin right now because you don't actually own it.
So let me tell you a quick story about that. I had thousands and thousands of dollars that I put onto Cryptopia back in 2017, I believe it was. and I was investing in like up and coming coins because Cryptopia had coins that you couldn't get anywhere else. And I was day trading and investing there. And I had like a couple Bitcoin and some other stuff. And Cryptopia went under, like FTX went under, and I lost everything. And last year when I was doing my taxes, I pulled up my own old ledger of what I had in Cryptopia, and I looked at what it would be worth today. It was over $2 million. Over $2 million worth of losses because I had it all in an exchange that went under.
Mm-hmm.
So that is why you use a wallet.
Mm-hmm. Yep.
What other questions you guys got?
Quick question. This is more of a 101 crypto 101 question. Like, if anybody, including these crypto YouTubers, telling you you should buy ABC coins, XYZ coins,
Yep.
what would you, and then you start looking into that coin, whatever, it could be any random coin. What do you typically look into to determine whether that's something worth looking into further, or that's a shit coin or whatever? Like, what research do you do typically?
All right. So first thing you do is CoinGecko. So this is like the CNBC of crypto, right? So you can come here, you can look up any ticker, and we'll just look at FTT. It's down 58% today after being down 98% yesterday. So it's down 91% in 7 days. So by the way, don't confuse this with real crypto. This is a poop coin that was printed by a company, right? This is not Bitcoin. This is not Ethereum. This is totally different. But yeah, you can come here, you can get general information. I always like to look at, like let's go to an actual one just to give you a little bit better example of research. So here's some on my watch list, right? So Frax is a cool thing. So, check out their Twitter. Like, are they active? What are they doing on like who's following them? And Twitter is a big part of it. So Twitter and Discord is like where if you want to like be all the way hands-on, like this is where you're going to be and spending a lot of time. But, check out their Twitter, see what people are saying about them. So like they're collaborating with other projects, which you'll have to know a little bit more about those projects, but like just see, are they active? Like, what are they doing? They have Discord, right? So can you see my Discord I pulled up or no?
No. And what you want to look at is like, if you were to pull up like a legitimate coins Twitter account and follow it, and then follow like one of these, rip off Dogecoin Twitters, you're going to see two different stories. You're going to see the shit coin's going to be like to the moon, and it's going to be all crap. It's going to be all hype. They're not going to actually be doing anything. And they're going to be talking just in circles. The coin that's actually doing something is going to be talking about partnerships. They're going to be talking about progress they made and things like that. So it's two different conversations, and you want to see if it's valid.
Yep. Check out their website. What is it they're actually trying to do? The world's first fractional stablecoin and crypto native consumer price index, rather than if we go to like Shiba or one of these dog tokens. Give me a dog token.
Yeah, well, even Shiba Inu's like,
so we'll just go to Inu.
Earn bone while you stake Shiba.
Right. So if we go to Inu, there you go. Look at that.
How legit does that look?
Let's look up another Inu. Hichachi Inu. Let's go to their website. Oh, there we go. Is a decentralized exchange-based token. 5% of all transaction is distributed to holders. So it's like, okay, loyalty rewards, global access, invest safely, how to buy the token. But they're not actually talking about doing anything like unique, right? So Frax, they actually have a stated purpose. Like they want to create a fractional stablecoin, crypto native CPI index, which some of this is a little more in depth. It goes into understanding macroeconomics and all that, but GMX, looks, multi-chain. Let's go to multi-chain, because this is another use case. Multi-chain, cross-chain router. So basically this allows you to go from one blockchain to the other blockchain, right? And what's cool, so you can go from Ethereum to Binance, from Binance, you can go to all these different chains, right? So there's an actual use case here. And if you lock this token up, you can earn, let's see what the APR is. Hold on. I've got to unlock. you can earn, what is it right now? Yeah, 31%. And this is actually paid out in dollars. Now you have to lock their token, which, you know, has obviously been going down with the market, but you can get a nice cash payout on this, right? So you just got to look, you know, go to their Twitter, join their Discord. What are people talking about? What's their actual use case? What are they trying to like actually do? And what's the value they're trying to provide? That's if you're like a fundamental investor, right? You can definitely make money on meme coin pumps and dumps and stuff like that. Like that's for sure. But if you're looking for fundamental long-term projects, that's really the process that you want to go through.
Yeah, and they all usually have like a roadmap, and they all have to have a white pages. You know, the white papers, right?
Yeah, so they usually all have, so this project kind of pivoted, but they created this thing called SudoSwap, which is like an NFT exchange. Okay, I won't do that one. It's a little more complicated. Let's see. Okay, HandleFi. So this is a cool project that I actually put on my watch list a couple weeks ago. Now it's down 60% now, but when 2 weeks after I put on my watch list, it was up 70% before all this happened. But if we go here, let's see if it loads. So they're creating a DeFi like foreign exchange protocol, borrow, convert, or trade multi-currency stablecoins backed by Ethereum. So this actually lets you mint tokens. So let's see here, convert, borrow. So this is a pretty cool application because it lets you mint dollars, euros, yen, pounds. It lets you mint, it lets you create a derivative of all these currencies, right? Because, so right here, look, they have the Europe, the USD, Chinese, Korean, Swiss franc. Let's have all these different currencies that you can mint. And what's the purpose of this? Well, because if you're in that country and you want to have, you own Ether, but you want to take a loan, in your local currency, right? Or maybe you want to do some foreign exchange. Maybe you think that, obviously the pound's been losing a lot of value lately. So maybe you wanted to get out of pounds into dollars. And then now that it's back to a 1-to-1 ratio, you would switch and make profit on that. That's kind of like the foreign exchange. But that's the point, is like, there's so many different use cases that can be made. Like foreign exchange is going to be on this, banking can be on this, like every financial use case, insurance, right? Every financial use case that you can think of can be put on the blockchain, because blockchain isn't an investment. It's actually a technology, right? And so we are just seeing these applications being built on top of the technology that offer different use cases. But at the end of the day, it's just like Instagram, Facebook, YouTube, they all have different purposes. What's the purpose that it serves?
All right, so guys, I gotta go. Do you think we should have Liam on again?
Yes.
Yeah,
Yes.
Leon's awesome.
Yeah,
Okay.
definitely.
Was this the most non-hyped crypto conversation you've ever had?
This was absolutely awesome.
Right.
Yeah, I know it's boring stuff, but this is like what's so revolutionary about crypto and blockchain, when you actually understand it for the more boring stuff rather than it's just going to go to the moon.
Yeah. So what we'll do is when we wrap up, I am going to send out Liam's contact information and a little bit about what he does. He does do consulting for people who want to learn more about cryptocurrency and kind of get, pick his brain. And he also has some other services that he offers that we'll share with you. But what we'll aim to do is, so the next session is going to be in a month, and I'll get an invite out to everybody if you don't already have an invite. That next Wealth Building Mastermind is just going to be an open session. You guys can bring any questions that you have, anything that you want to discuss. I may actually give us a topic to focus on, like we might just focus on real estate investing next month, but I'll let you know in an email. And we will get scheduled with Liam again, because I think what it would be good to do is to have an hour where you guys just bring your questions about cryptocurrency and blockchain, and Liam answers them for you.
Yeah.
Would that be cool?
Yep.
But yeah,
Yes.
so go ahead, Helen.
No, that would be great. I just, from our last session, I actually started purchasing a little amount of Bitcoin, just so I can start to understand what it is. So that's why I'm taking it step by step to try and even wrap my mind around it.
Yeah.
So we'll let you know, like we might even get a special cryptocurrency session in between now and next month if we can. I'll talk with Liam and we'll get it scheduled for everyone.
Yeah. But just on sign off notes, yeah, Helen, you're doing that absolutely the right way. Start small dollar cost average, whether it's a couple bucks.
That's what I've been doing.
And yeah, and you got to be a long-term investor, right? So if you started buying a couple weeks ago, it might have been at 20,000. Now it's at 15,000. If you liked it at 20, you should love it at 15, right? And like I said earlier in the call, it's all about context. So that's the hard part about crypto, is that you do like we could have gone down a bunch of different rabbit holes on every topic that we talked about. We tried, I did my best to keep it somewhat contained, but it's really about context. And that's, like I said at the beginning, that's what I gained from 2017 to like 2020 selling metals, is just the context of, oh, this is how the whole big picture works. So you really have to understand the big picture of the economy to understand how crypto works. Yeah.
I agree.
All right, guys, I got to roll. I got to take care of the kids while my wife jumps on a meeting. So thank you, Liam. We really appreciate it.
Absolutely.
We'll be in touch with everyone here soon. Thank you.
Yes, we'd love to come back. Talk to you guys soon. Take
Bye.
care. Bye.